Let's move now to see an exercise on budgeting. It will need your calculators and I will go through with it. Creation Corporation manufactures and sells a seasonal product that has peak sales in the third quarter. The following information concerns operations for year 2, the coming year, and for the first 2 quarters of year 3. The company's single product sells for 30 dirham per unit, and the budgeted sales in units for the next 6 quarters are as follows. We have the budgeted unit sales during 4 quarters of year 2, 40 in the first quarter, 60 in the second quarter, 100,000 in the third quarter where the sales will be, 50,000 in the fourth, and during the coming 2 quarters of the next year, it will be 70,000 and 80,000. We have to work on preparing a sales budget and a schedule of expected cash collection from these figures. Sales for that Creation Corporation are collected based on 75% in the quarter the sales are made, and the remaining 25% in the following quarter. So whatever we sell during that quarter, we collect 75% out of it, and the remaining 25% will be collected in the next quarter. So on January 1, year 2, the company's balance sheet showed 65,000 in accounts receivable. So these are 25% of the sales figure of the fourth quarter of year 1, all of which they will be collected in the first quarter of the coming or the existing year. Bad debts are negligible and can be ignored. Let's look at the sales budget. As we said, the budgeted sales for each of the four quarters of that year, 40,000. And the price per unit is nothing but 30 dirham per unit. So for the total sales as a sales budget, we are planning to sell 1,200,000 dirham in the first quarter, 1,800,000 in the second quarter, and 3 million in the third and in the fourth. A total of 7,500,000 will be our sales revenue. If you look at working at the cash collection, at the budgeted cash collection, as we said, 75% will be collected in the first quarter and 25% in the second quarter. If you do the math, can you just give me the figures? We have 1,200,000 dirham. These 1,200,000 dirham, 75% of them will be collected in the first quarter, and the remaining 25% will go for the second quarter. Just do a simple math. 75% of 1,200,000. That's 900,000 to be collected in the quarter where the sales are made. Out of this 1,200,000, 25% will be collected in the second quarter. So just do the math. For the second quarter, the sales are 1,800,000. 75% of it will be 1,350,000. The remaining 25% will go for the second quarter. In the first quarter, we have 900,000 sales from that quarter. 75% are collected, and accounts receivables from the fourth quarter of this year of 240. So our sales budget, followed by the collection, expected cash collection budget, it is 1,140,000 in the first quarter, which amounts over the 4 quarters to 7,365,000. Now, the same like what we did before. The company desires an ending finished goods inventory at the end of each quarter equal to 30% of the budgeted unit sales for the next quarter. On December 31st, year 1, the company had 12,000 units on hand. So they started with 12,000 units remaining from the previous quarter. Always, when we're talking about the production, Let's look at the budgeted unit sales. We have budgeted unit sales of 40,000 and the ending inventory of finished goods. As we said, that's 30% of the unit sales of the next quarter. So always we have to look into the sales budget to see how much is the sales budget in the next quarter. 30% of it will be 18,000 to be left on hand as inventory during the first quarter. So your total need in terms of inventory is 58,000, the summation of the 40 and the 18,000. We started the year, as we said, with 12,000 from the previous, 12,000 units on hand. So we had 12,000, so we're left to produce 46,000 units. These 46,000 units, they need to be produced during the first quarter. The same for the second quarter, the third, and the fourth. So during the year, a summation of 259,000 units will have to be produced. Remember here that every figure that we have here, the ending inventory of the third quarter is the beginning inventory of the fourth quarter. And what's left in terms of this year ending inventory will be the beginning of the first quarter of the year after that. Now, in terms of the production, we knew by now how much to produce in terms of units. But let's look at the cost. 5 pounds of raw materials are required to complete 1 unit of production. So for each 1 unit of production, we need 5 pounds of raw material. The company requires an ending raw material inventory at the end of each quarter equal to 10% of the following quarter's production. So we have for the second quarter and the first quarter, we have 40,000 in terms of sales, and we have required production of 46,000. For the second quarter, we have 60,000 in sales and a required production of 72,000. So in terms of raw material, we need 5 pounds of raw material for each unit to produce. And we need to produce in the first quarter 46,000. So that's 46,000 times 5. This is the amount that we need to put aside. And each raw material unit will cost 3 dirham per pound. So we need pounds to produce, and we need for each 5 pounds to produce a unit, each pound will cost us 3 dirham. So the raw material purchases are paid for at 60% in the quarter during the purchase, and the remaining 40% are paid in the following quarter. So here, in the raw material cost that is included in the production cost, I have a cash disbursement, an expected cash disbursement, where it is 60% of the current production plus 40% to be paid next quarter. So on January 1, year 2, the company's balance sheet showed a 300,000 dirham in accounts payable for raw material purchases, all of which will be paid for in the first quarter of the year. So again, we have to prepare a direct material budget. We're just going through the process again. To prepare a direct material budget and a schedule of expected cash payments for purchases of material. Let's look at this slide. Based on the production budget, here we have to work on the production budget, and from then see how much raw material we need and how much to pay for this raw material and how much is our expected cash disbursement. We have, first of all, the required production is 46,000 units. We said that the raw material needed to produce each unit is 5 pounds to produce each unit. So actually, in terms of production in pounds, we need 230,000 pounds to produce these 46,000 units. Again, the desired ending inventory of the raw material is nothing but a 10% of the next quarter's production requirement. So 360,000 in the next quarter, that's 10% to be left from the first quarter. So the total needed in terms of pounds to be purchased is 266,000. We started the year, as we said, with 23,000 in raw material inventory left from the previous quarter. So all we need now in terms of raw material to be purchased is the difference between 266 and the 23,000. That's 243,000 pounds of raw material. And going back, you remember that each pound will cost us 3 dirham. So effectively, we have to purchase, in terms of raw material, the amount of 729,000 dirham. Here, remember one thing. That 729,000 dirham is not paid during the first quarter all. During the first quarter, we will only pay 60% of that amount, and during the second quarter, we pay the remaining 40%. So moving to the first quarter cash disbursement, during the first quarter cash disbursement, all we have to pay is 60% of the 720,000, that's 437 and 400 dirham. Out of these 729, the remaining 40% will be paid in the second quarter, amounting to 291,600 dirham. Having all of these in mind, we have some payables coming from the previous quarter. So in our cash disbursement, again, all we have to do is add the accounts payable, add what we have to pay during that quarter. We will sum up to 757,400 dirham. The same exercise will have to be done for the second quarter. 291 and 600 dirham. These are 40% of the first quarter purchases, and 70% of the second quarter purchases are paid during the second quarter. So for the year, for the full year, we have to pay 3,879,300 dirham. This is an exercise where you can follow up on each item of these raw material purchases to see how much during the year you can expect to pay money based on your production budget and based on your sales budget as a beginning.